January 2nd, 2020, 9:30 a.m. Market open. You had $10,000 in your bank account. The stock market was at all-time highs. The economy was booming. You made a decision that seemed smart, reasonable, and safe. You decided to keep the money in cash. Not in stocks, not in VOO. Just cash sitting in a high-yield savings account earning a guaranteed return. Fast forward to today, November 19th, 2025. That decision just cost you $10,132.47. Not lost, not risked. Cost you, because while your money was sitting safely earning 0.5% interest, the Vanguard S&P 500 ETF turned $10,000 into $21,927. Let me show you exactly what happened. Quick favor, hit like and subscribe right now so YouTube shows this to more people who need to see it. You had two choices back then. Option A, keep $10,000 in cash in a high-yield savings account earning 0.5%. Safe investment, no risk, no volatility. Your money is protected. Option B, invest $10,000 in VOO at $298.42 per share. You'd own 33.51 shares, exposure to 500 largest U.S. companies, risky investment, market volatility. On paper, option A looks smarter, right? The stock market is near highs. Recessions happen. Crashes happen. Why would you risk $10,000 in stocks when you could keep it safe? But here's what nobody tells you about that decision. Exactly 81 days later, everything collapsed. The pandemic hits. The economy shuts down. The stock market enters the fastest bear market in history. VOO crashes 26.92% in just 11 weeks. If you invested on day one, you're now down $2,653. Your portfolio is worth $7,347. This is where everyone panics. Reddit explodes with "I sold everything." Financial news screams market collapse. Your friends text asking if stocks are still safe. This is the moment that determines everything. Most people make the wrong decision here. They sell, they panic, they save themselves by locking in losses. But what if you didn't panic? Here's what actually happened. The market recovered faster than anyone expected. By May 2020, just 6 weeks later, VOO was back above $300, recovering the COVID losses. By December 31st, 2020, your $10,000 in VOO is now worth $11,697. Meanwhile, your safe cash in the high-yield savings account, you earned $50 in interest. Your $10,000 is now $10,050. The gap is already forming. $1,647 difference in just 1 year. Everyone saw what happened in 2020. They missed it. Now they're buying. 2021 explodes upward. VOO returns 27.02% for the year. Your portfolio on December 31st, 2021 is worth $15,043. That's $5,043 in total gains, a 50% return in just 2 years. Your cash account? $10,090. The high-yield savings rate dropped to 0.4% because the Fed cut rates to near zero. The gap is now $4,953. You've already missed almost $5,000 by keeping cash. But this is where the story gets really interesting. 2022 arrives and inflation spirals out of control. VOO drops 19.52% for the year. Your $15,043 portfolio becomes $12,311. You're down $2,732 from 2021's peak. But here's the trap. Your cash account is earning 2.02% in 2022. The high-yield savings rates are finally rising. Everyone says, see, this is why you should have kept cash. Now who's sorry? But let's check the real numbers. Your $10,090 grows to $10,294. Gain of $203. Sounds good, right? Except inflation is 6.5%. Your $10,294 has the purchasing power of $9,634 in 2020 dollars. You've lost $666 in real wealth while earning 2%. Meanwhile, yes, your VOO is down, but you still own stock in 500 profitable companies. The crash is temporary. The company's profits remain real. The dividends keep coming at $6.36 per share. That's $222 you reinvested, buying more shares at lower prices. This sets you up for what happens next. Cash wasn't safe. Cash was a trap. Everyone who panic sold in 2022 is in cash. They feel smart and safe. Then 2023 happens. VOO returns 24.32%. Your portfolio jumps to $15,529. By end of 2024, VOO returns 23.35%. Your portfolio hits $19,394. In just 2 years, you've recovered all 2022 losses and made $7,082 more. Those who stayed invested feel vindicated. Those who sold in 2022 to be safe are now watching from the sidelines, earning 4.97% on cash while the market gains 23% annually. The opportunity cost of their safety is compounding daily. 2025 year-to-date, VOO is up another 13.06%. And now we arrive at today, November 19th, 2025. Your $10,000 invested in VOO on January 2nd, 2020 is now worth $21,927.22. Your $10,000 kept in cash is now worth $11,794.75. The difference is $10,132.47. In other words, your decision to keep money safe in cash just cost you $10,132. Let me break this down. For every $1 you earned keeping cash, VOO made $6.64. Your total return on cash was 17.95% over 5 years. VOO's total return was 119.27%. Annualized, cash returned 2.16% per year. VOO returned 14.29% per year. If you had $50,000 in cash instead of $10,000, this choice cost you $50,662. If you had $100,000 in cash, this choice cost you $101,325. Here's what nobody talks about. Your $11,794 in cash sounds like you earned $1,794 in 5 years. But that's not how wealth works. Cumulative inflation from 2020 to 2025 was approximately 24%. Your $11,794 in 2025 dollars equals $9,497 in 2020 dollars. You've lost $2,503 in real purchasing power. Your safe decision made you poorer. Meanwhile, your $21,927 in VOO in 2025 dollars equals $17,541 in 2020 dollars. You've gained $7,541 in real purchasing power. Cash didn't protect you. It impoverished you. Most people forget about dividends. VOO paid dividends every year. $5.38 per share in 2020, $5.43 in 2021, $5.95 in 2022, $6.36 in 2023, $6.70 in 2024. When you reinvest these dividends, buying more shares with the dividend payments, something magical happens. You end up with 35.99 shares instead of 33.51 shares. That's 7.4% more shares from just reinvesting dividends over 5 years. This compounding is the hidden wealth builder. Cash doesn't do this. Cash just sits there. $1 is always $1. But 1 share of VOO becomes 1.074 shares just from dividend reinvestment. Now, I'm not saying never hold cash. Here's when cash is the right choice. Emergency fund of 3 to 6 months expenses should be in high-yield savings. That's $15,000 to $30,000 for most people. This money should not be in stocks. Short-term savings under 3 years, like money for a house down payment or college tuition due next year. Cash is appropriate because volatility risk is too high. And if you're risk-averse and can't stomach 30% portfolio swings, peace of mind has real value. Consider 60% cash, 40% VOO instead of 100% stocks. But if you have your emergency fund already set, no big expenses coming, a 5+ year time horizon, and can tolerate volatility, then excess cash is mathematically costing you money. The opportunity cost scales perfectly. $1,000 in cash became $1,179. In VOO, it became $2,193. Cost of $1,013. $5,000 in cash became $5,897. In VOO, it became $10,964. Cost of $5,066. $25,000 in cash became $29,487. In VOO, it became $54,818. Cost of $25,331. If you had $100,000 sitting in cash for 5 years, it cost you $101,325 in opportunity cost. That's more than most people's annual salary. That's life-changing money. Here's your action plan starting today. First, assess your current situation. How much money do you have in cash right now? Do you have 3 to 6 months emergency fund? Keep that in high-yield savings. Beyond that emergency fund, what are you doing with excess cash? Calculate your opportunity cost. If you have $50,000 excess, you're potentially losing $42,000 over 5 years. If you have $100,000, you're potentially losing $85,000 over 5 years. Make a decision. If 5+ year time horizon, invest in VOO. If you need money soon, keep in high-yield savings. If you're risk-averse, do 70-30 or 60-40 VOO to cash. Then set it and forget it. Don't panic during crashes because they're temporary. Don't try to time the market because you'll fail. Reinvest dividends for compound growth magic. Check back in 5 years. 5 years ago, on January 2nd, 2020, you had a choice. Keep your money safe in cash or invest it in VOO. The stock market was scary. A crash was coming. Cash seemed smart, but the data tells the real story. Those who stayed invested through the COVID crash, the 2022 bear market, and all the chaos in between turned 10,000 into 21,927. Those who played it safe, 10,000 became 11,795. That $10,132 difference isn't just money. It's years of retirement you can take earlier. It's financial security your family doesn't have. It's the opportunity cost of fear. The math doesn't care about your feelings. The market doesn't care about your fears. Time in the market beats timing the market. And verified data beats speculation every single time. Your move. So here's the question I want you to think about. How much money are you leaving on the table right now? Because if you have $50,000 in cash instead of VOO, this choice cost you $50,000. If you have $100,000, that's over $100,000 in opportunity cost. The verified data doesn't lie. Drop it in the comments below. Let me know how much safe cash is actually costing you. I read every single comment, and I want to see if this resonates with you. And if this video helped you understand why cash might not be the right choice, smash that like and subscribe button. It helps this verified data reach more people who need to see it. This video is for educational and informational purposes only. Investment performance shown is based on historical data and projections. Past performance doesn't guarantee future results. Always conduct your own research and consult with a qualified financial advisor before making any investment decisions. Thanks for watching.